All right, so we started recording, guys. Welcome. It is March 28, 2021. So for our global pitch and dip training, we're going to go over this new super trend strategy that me and Alex have been testing over time. We've been successful with it. We want to continue to test it, but we want to show you guys just a little bit of an overview or a live session of exactly how it works. So I'm going to turn it over to Alex.
Alrighty, so the super trend, we have a video kind of explaining this strategy in depth, but I'll go over just the basics of it. It consists of 3 super trend indicators. In your trading view, you just type in super trend and it's the first one right here. So in the video that Paul has explaining it, you'll see what settings to use for these because the default settings will not work. Okay, and other than that, it's just a EMA 200 period or length. And the idea of it is you want to look for buys above the EMA and sells below the EMA. So if you're above the EMA, what you're going to want to wait for is a candle recommended on the 1 hour. You could get away with some of these on the 15-minute, but the 1 hour seems to be more solid. And on the 1 hour, when you get that candle that lights up all blue in the indicators panel, that's your buy signal. So you'll notice these red lines come in during pullbacks if you're going in an uptrend. So the idea is to wait for a candle that breaks all of those red lines. And like I said, lights up blue on this panel, all 3 of them blue. So on this candle, we wouldn't do it because there's 1 red super trend and 2 blue ones. We want to see all 3 blue if we're going in an uptrend. This next candle right here, all blue. So as soon as that candle closes, timer reaches 0 seconds, you're going to get into a buy, right? Now, risk to reward, we're still testing out what works best. But for now, the way that I'm trading on demo, I'm using this strategy to test if it works well with a 0.5 to 1 reward risk ratio. So your risk is a little bigger, okay? But this is just something we're testing out in the meantime. And this has been very consistent so far. So this trade hit a couple hours later. And mind you, this is being back tested in the New York session. So in this sessions indicator, I have New York selected. Only going through the New York on this. Okay. This day didn't have a setup. Why? Because we had no red line, like these red resistance lines, to break and give us a new signal to buy, all blue. That's what we want to wait for after a trade finishes out. So we had no setup there. And then the next day, our setup was really right here. Okay, 5 a.m. So not really New York session, but that's where the candle turned all blue on the indicators, and you'd buy for the 0.5 to 1 reward risk. And that trade hit there. On this day, no setup. Why? Because we're in an uptrend. We're above the 200. We need to break all 3 red lines for a signal. So here's another one here. This last red line was broken. The indicators lit up all blue. Buy execution on that. Okay. And this one here. This one had a stop loss down here. It gave you the setup right here. So we had some red. We want all blue. Buy. And a lot of these candles put you into drawdown. So this trade held out all the way to the next day. And that next day had its own setup as well. Right here. This candle all blue. So that's a buy. On this one, I stretched my take profit further because I still had this previous one I was expecting to hit. So I just Instead of doing the 0.5 ratio, I just matched it because I know I'm waiting for this one to hit, which they both did over here. And then this was actually a trap. No super trend on this day. Before New York session, there was a little one right there because it crossed the red line. All blue, that's a buy. But I got in right when New York session hit at 8 a.m. So I set up the trap for that. Buy stop. Right up on this candle. Triggers. TP1 smash. TP2 smash. And these zones are like my daily to 4-hour to 1-hour zones. So it's also a top-down analysis. That way I'm not taking a signal the wrong direction and I'm about to make a U-turn, you know. So these had no trades these 2 days because we did not have a break above any of these red lines really. We had one here, but again, I had this already in mind as a daily support or resistance. So I wasn't expecting that to break. TDA is real important, guys. And then this day here, we had all blue here, technically. Okay, that had a red, so that was your buy. And that trade hit a couple hours later into Asian session. And this day here, we had the perfect buy right here, and it was a trap. This engulfing candle, trapping the low of the wick to the high of the wick and back. Buy stop, right about there. TP1 smash. Back to the daily resistance zone. Okay. No setup on this day because we did not break any red lines. And we're still above the 200. Okay, on this day, we formed a trap that almost broke the 200, but you guys remember the trap strategy really depends on the 50 EMA. So if we had that on, we had a perfect trap there with the engulfing, this candle, the trap zone, catch the sell early. Okay, but if you weren't doing the trap, you would probably just use your judgment, know that this candle broke the 200 EMA, and just sell market, execute, trade smash. This setup was a trap with this long engulfing, all of these candles engulfed. So using the trap, that one played out nicely because you did not activate until right about here. And from there, that was just straight profit down. This one played out nice. All red since we're below. Let me turn the 20 pips off.
So Alex, if you could as well, could you kind of explain the indicator a little bit more to Davita because she just came in about 10 minutes ago. So she might want a little bit more of a background on us too.
Okay. Yeah, as far as I understand with the indicator, the Supertrend indicator, you're going to add 3 of them. There's a video explaining how to set the settings that Paul has. And it's kind of acting like resistance when you are below and when you're above as well. And then the blue, or by default, it's going to look green. The bottom line is a support. So when you're below the 200 EMA, you're looking for any sells that it gives you. And to confirm a sell using this strategy, all you're looking for is a pullback. So like a support line showing up and just waiting for that to break. So basically, once you find a candle that closes all red on this section here, you're looking for a sell. So you see there's a red, a blue, and a red on this candle. So we do nothing. But the next candle gives you red, red, red. So that's a sell, market execute. And your risk to reward, just see what works for you. But we're still testing what hits the most. So these trades are consistent when you do it like that. Right here, same thing. Red, blue, red. This candle gives you all red, you sell. Okay, why? Because we're below the 200 EMA. So we come over here. This might have been a trap. I don't think that was one. We can't really buy this, even though right here, we broke the resistance line. Technically, that's like a buy, but we're below the 200. So we really shouldn't be messing around trying to buy below the 200. We would just wait for it to cross the 200 and give us a new buy. So what I'm looking for now, which is current price right here, or when we open up on the next page, I want to see a bullish candle break this final red resistance line. And when I get that, it's going to light up all blue here, and I'll hit buy. And that's really how this works. Just buy above the 200 and sell below the 200. The EMA. So I think from the beginning of March, I started this back test. Yeah, about March 2nd, there wasn't a trade on March 1st. From then to now, this was like 15 wins in a row, no losses. And some of it was trapped, but Supertrend is pretty consistent if you use it the right way. So that's pretty much it. It's simple. Do you guys have any questions about it? Confused about anything?
Yeah, like Paul said, I'm so sorry I'm late. I came in
Okay.
a little too late.
Mhm.
So I heard okay, I think I know what a sell is. Is it when you see a candle occurrence or candle grouping that's either red, blue, red, or blue, red, blue? Is that a sell?
Okay, so it's usually a red candle for selling because it's depending on the type of red candle it is, it's giving you an indication of a lot of momentum going that direction. So it gives you an idea to sell, but only when you know the candlestick pattern specifically. And when you use an indicator like the EMA, like the 200 EMA, when you're below it, you would look to be selling, but only when you have a specific candlestick formation and you understand that, okay, I'm at a key level, so I know I can sell this and make some profit off of the sell instead of the buy. Does that make sense?
Oh, so you mean SELL, not CELL.
Correct, yeah. Mhm.
Okay, sorry. I misunderstood.
Mhm.
What's a EMA?
EMA is an exponential moving average. You can find it over here in indicators and strategies, moving average, exponential. And it's kind of a definition here. It's basically like a support and resistance trend line, or essentially a dynamic trend line. It moves with the candles and sort of gives you your trend depending on where price is on that time frame. So we're on the 1 hour. But if we switch to like the 2 hour, it'll look a little different because it's a trend line that goes with the candles. So let me just clear everything. See, the 1 hour has a cross up. 30-minute looks a little higher. So an EMA is just kind of giving you like your trend at that moment, whether you're going up or down.
Oh, okay, thank you.
It's below here, so it's just causing a lot of buying. It's kind of like a trend line. Yeah, so just to reiterate one last time, I want to see a bullish candle close above this line, and we'll get all blue on these indicators to be able to buy it.
All right, you guys there?
Yes.
Yes, I'm still here.
Alex, you still there?
Yeah,
Okay, I didn't know if you were done or not.
yeah, that's pretty much all I got,
Okay.
unless there's any other questions.
Okay, so did you guys understand the indicators so far?
Yes, so far.
Okay. Yeah, the indicator is something that Russell brought to our attention last week. Of course, we want to do our due diligence and to make sure it will work with our strategies that we're already implementing. I've actually kind of tested it myself, and he's actually been pretty solid next to the trap. So yeah, I was Alex, you read my mind.
There you go, guys. That'll explain it a lot better than I did.
Yeah. Matter of fact, do you think it would be worth to go over the video even on this session as well, and then have
Yeah.
watch it later?
Yeah. You want to play it now?
Sure.
Okay.
Sounds good. Thank you.
Okay, I'm gonna play it. Let me know if you guys hear
Supertrend
it.
indicator strategy for day trading Forex. Man, this strategy is going to
Perfect.
blow your mind. So
Okay.
this is a super trend trading strategy for, for currency trading for Forex. And it uses 3 super trend indicators and 1 exponential moving average indicator, right? Let's get directly into it. I'll talk about all the subscribing and the Telegram channel, all that stuff later on. Let's do this right now. So this is what your chart's going to look like. So I'm going to help you guys set up the charts to have all these indicators in the different settings, and then we'll go over what the strategy is. So make sure you do watch till the end. Don't go anywhere. So let's open up a brand new chart on TradingView. So this is what your chart's going to look like. Now we're going to add the 3 super trend indicators, and we're going to add the 200 EMA. So go here, click here for the indicators and strategies. Super trend, right? We're gonna do this 3 times. 1, 2, 3. And we're gonna do the EMA, the moving average exponential. Do that once, exit out. And now here's where we're gonna change the settings, right? Pay attention to all of this stuff. So go into the settings for the first one. You're gonna change this setting to 12 and leave that at 3. We're not going to show the buy sell signals. Okay. We're going to go into the style, and we're going to get rid of like these clouds that come up. Okay. So that's the first one. On the second one, you can do the same thing. You're going to get rid of the highlighter stuff. And for this setting, you're going to do 10. You're going to leave that at 10. You're going to change this to 1. Again, uncheck the buy sell signals. Okay. On the third one, you're going to change this to 11 and 2. Again, get rid of the buy sell signals. And in the style, you're going to get rid of the cloud. Click OK. Then you're going to go into the EMA, the exponential moving average. I like to make this a little bit darker or a little bit thicker, just so it's easier to see. And over here, the length, we're going to make this 200. All right, so this way we know what the trends are looking like. So boom, so there we go. Now that your charts are set up, what exactly is this awesome super trend indicator strategies. That's gonna, that's gonna make you a pretty good trader. This is great for beginners or advanced level traders. Like it works for everybody. I love using this strategy on the 1 hour time frame. I've used it, even for for the 15-minute time frame too. So I'll show you guys some examples of both, and then we'll kind of go from there. So on the 1 hour time frame, and we'll randomly just look at some other pairs too. This works really well. And the point of this super trend indicator strategy is that, if you have just one indicator, it'll show you like either the short term or the long term, depending on what your settings are at. When you have three and they all three line up for the same, that gives you a great signal to get in. So for example, when the price action is above the 200 EMA, you're only looking to buy. And if you guys follow my channel, you guys know that, I love the 200 EMA to figure out trends and stuff like that. It's great. And if the price action is below the 200 EMA, you're only going to be looking for sells. So when do you have a buy signal? The thing is, the whole saying about trend is your friend and all of that stuff, it works out great. But there are also times when the markets are choppy. So how do you really know when it's trending, even when the price action is above the 200 EMA, right? There's going to be a lot of choppy action going on. Like, look at all of this, right? It's just stagnant. So what this does is you want to make sure that you have three lines before you get in. Even if there's one red line, right? Like right here, this is green, but that's red, no, we're not going to get in. We're going to get in with all the three lines are green. And sometimes it's a little hard to look at the dots and the lines just because of there's so much data on here. I just keep my eye out for these numbers up here, all right? Because that's going to show you. You see how when you go, it'll tell you, okay, green, 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 green. One red popped up, right? You see all of that? So look at the action right here. Look at the numbers right there, and look at the color right there. Because I know a lot of times, you'll set up your indicators and then you'll just minimize it. And now it's like, okay, which ones are green, which ones are red? It's very difficult to see. I like to leave these open. So this way, when I look at the numbers here, I know if they're red or green. So here's a prime example, right? The price action is above the 200 EMA. This is live right now. So where would you look for a buy signal? So if this was a little while ago, you see how up here, it's showing, okay, there's one red, two greens. Boom, one, right? Everything turned green. At the end of this, when this candle closes, you get in. And then you saw how, for 2 hours, it went up, you would have made some profit, right? So a lot of, for stop loss and take profit, it's, I like to use at least a 1 to 2 risk to reward ratio. But I'm also a big believer in, moving your stop loss to break even when you've got some decent profit, because I don't like trades turning around on me. All right. I'd rather have some big wins and a few losses than, some wins and a bunch of losses where I'm hitting my stop loss, like with a loss. I'd rather have it hit my stop loss, which is a break even when I'm in a profit. And to set your stop loss, multiple ways of doing that, depending on whatever your strategy is. Sometimes I'll use the ATR or a multiple of the ATR to set my stop loss. Sometimes I'll use a price point right below the latest low, So, you guys can figure that stuff out. I just want to show you how profitable this thing is, and you guys can adjust some of those settings to whatever your trading style is. So far, if you're enjoying this video, please make sure to subscribe to my channel and hit that like button, drop me a comment below. And also, you can check out my free Telegram channel where, I provide, the trades that I'm taking, so you guys can follow along. And, if you were to, copy some of my trades, well, more power to you. But, check out my Telegram channel where I'll post a free trade once in a while on there, because I am working on a premium. The last, boom, red, you see green, red, green, green, red, keeps going, boom, right? You see where all three lines turn to green. right? Right up here. You buy at the end, you set your stop loss wherever you're comfortable with, and then you look at riding all this way up, and then boom, you have that turn red, you can get out. You know, you can get out right there. Take that, take all of that profit. And then since, you know, the price action is still above the 200 EMA, you can still keep waiting. Boom. Again, all three lines are green. You get in at the end of that candle and you write all of that stuff up too. You know, we can keep going on and on and on. Like, this stuff is like magic, man. It is so good. Like, even here, it feels a little choppy, but guess what? You would have gotten in here, taken some profits, moved it to a break-even stop loss. You could have, you know, stopped out at break even on this one. But when you've got moves, you've got moves. So, right, this we wouldn't have taken anyway because this is below the 200 EMA. So with the price action below, doesn't seem like there's much here. Let's look at some other pairs. You know, I know a lot of people like to do the Euro JPY pairs. Let's see how that would have played out. I've seen some big moves over here. So again, red, because it's above the 200 EMA, we're only looking for buys, right? And look at the numbers right here. Green, green, red. There we go. Right after this one, this turns green. All three lines are green. You get in at the close of that candle and enjoy that big move up, right? That's huge. That's ridiculous.
Hey, Alex, can you pause the video just for a
Same thing
second?
here.
Absolutely.
Can you kind of go back a little bit when he kind of highlights when all those prices are green?
Yeah.
No, I mean, I think it was just going back just a little bit more.
Just a little bit. Okay.
Yeah, when he was talking about that last candle.
This one's good.
Right when he was talking about that last candle.
Okay.
Yeah, it was real close, like when he was pointing to
Not bad.
yeah, that one
Right here.
So
Thing here.
go a little bit further, it was just right on it. That's when all the maybe back a little bit more.
Okay.
Yeah, right, like right there. You see how all those numbers were green? Well, not at that point.
They play it from here. Maybe he's gonna. Is it this one here?
Yeah.
Green, green, red.
Right
There we
Right
go.
there. Okay, can you
Right
pause
after
that?
this one.
So guys, I wish I could annotate on this, kind of circle it. You see where all those numbers are green all the way to the left? Maybe I could probably, you think I could take control? Yeah, thank you.
No problem.
Turns green.
She will allow me. Oh yeah, it will. So guys, the one thing you want to keep in mind is that what you want, whenever a candle closes above the 3 green lines, that means price is going bearish. You'll see these become all green. So basically this gives you confirmation that it's going into a solid buy as well. If all these 3 are red and you have confirmed that price is closing below the 200 EMA and is closing below the 3 red lines, then that's pretty much a confirmed bearish position to take, or a sell position. Does everybody copy me so far?
No, where's the 3 red lines, please? I see 3 green lines.
I'm saying this is the same area. So if this says 3 green and you have a bullish candle that closes above those 3 green lines, then it's a confirmed buy. Same thing, same thing. If price closes below the 3 red lines and all these are red, then that's a confirmed sell. Same area. So I just wanted to throw that tip out there. I'll turn it back over to Alex. Give a remote control. All right, Alex.
Okay. No problem. Thank you for highlighting that.
No problem.
All 3 lines are green. You get in at the close of that candle and enjoy that big move up, right? That's huge. That's ridiculous. Same thing here. You're above, the price action's above the 200. That turns green. You get in, you ride it until the numbers change to red, right? You could have your 2-to-1 risk to reward, or you can keep riding it up until one of the super trend indicators turns red. All right. Let's see, Euro USD. I know people like trading that as well. Same thing. And you know what? Let's just randomly just go back and back and back. Let's look at some sell signals, right? So now we want everything to be red. When we're below the 200 EMA, we want everything to be red. So green, red, there we go. A little bit of it. That was very quick. That would have been a loss. And guess what? Trading is a probabilities game. So if you're expecting every trade to be a winner, yeah, you're in the wrong game. Like you're gonna take some losses. You just have to manage your risk. Right. So all right. So red, green, red turns red. On this one, you get in at the beginning of the next candle. You enjoyed that much profit. Again, red, red, green, green, red, red, green. Boom. Right. So that made all the 3 super trend indicators red. And now you get in at the beginning of this and you enjoy that ride all the way down. You could hold it until one of the indicators turn green. You can get out there, or you can just take your already selected profit from the beginning. Let's pick another. See, NZD CAD. Some people like that. GBP USD is another very popular one with some decent spreads. So we've looked at a bunch of 1 hour time frame ones. Let's look at some 15-minute ones to see how well this does with the 15-minute as well. So right here, GBP USD, you're above the 200 EMA, so you're only looking to buy. Look at the numbers right here. Look at the numbers right here. Right? Red, red. Okay, these turn green. Right? You have your stop loss somewhere here. And you ride it up. And when it turns red, you get out, or you take your predefined profit. So with the shorter time frames, you're gonna have you're not gonna have as much in profit, but you're gonna need to handle your stop losses very, very tightly, because these things can change. But when you've got the 3 matching up, you're gonna take some profits. If you're scalping, you're gonna take some profits off of it. You just have to make sure that all 3 indicators are the same color. So again, let me I guess create you guys a little cheat sheet, right? To go over with what your settings need to be. So 3 super trend indicators. You're gonna do the settings of, and let's write this down so you guys have some more context for this. Okay, let's make this big so you guys can read. All right. Super trend indicator. You're gonna use 3 of them. The first one's gonna be a setting of 12 and 3. The second one's gonna be a 10 and 1.
I hope you.
The third one's gonna be 11 and 2. You're gonna do a 200 EMA. If price is above 200 EMA, only buy. If price is below 200 EMA, only sell. It does not get any easier and simpler than that. You just, I should change, come on. Why can't I edit this? Yeah, so basically it needs to say super trend, not Trent. All right, super trend indicator. Oh, there we go. All right. So you've got your settings, you've got the strategy. Now back test this stuff before you risk your money. See what kind of results you guys are getting. But this is an amazing strategy for scalping and for day trading Forex. Like, I love this strategy. All right. And if you haven't yet, make sure you hit that like button and drop me a comment, man. It really helps. And then, of course, my Telegram channel link is below.
All right, yeah. So that's pretty much the video, guys. Any questions?
No, I'm gonna watch it again though. Thank you.
Oh, no problem. Alex, if you don't mind, if I can share my screen. So basically, I have this in the membership as well. I want to show you guys where to get it. I got to figure this part out. It's crazy. Then we're going to probably spend another 7 minutes to go over the 2-week syllabus. This is one part. We're going to go over the basic Forex terms. Originally, under indicators, I have the Supertrend indicator. So this is where you can find a video. This is the same video. So this is where you're going to basically find this video if you want to watch it again. Now, what I'm also going to put too as well, any live sessions that me and Alex does, whether it's with the team or just me and him, then I'm basically going to put the replays here, the Supertrend strategy live session. Should say live session replays, but I'll change that. And that's going to be all lined up here. So that way, if you want to watch the replays of this strategy, you can. I also have it for the trap strategy as well. We already have a whole bunch of those. So I just want to show you guys where to find it. Excuse me. So that way you guys know how to get access to it. It's just another strategy. Another indicator that you guys can use. Any other questions so far before we move on? Okay. So for the 2-week syllabus, we'll probably go over 2 videos. We may go over a little bit over an hour, but that's fine because these videos aren't long at all. So Coach Max kind of updated some content and kind of changed it a little bit. So some things are the same, some things are a little bit different, but kind of the same before. So last time we went over 2-week syllabus, we basically went over what Forex is. But she also added an intro to Forex part 2. And I think this kind of explains it a little bit more exactly what Forex is. It kind of gives you a little bit of a deeper understanding. So we'll go over this video and then we'll go over basic Forex terms. This video is only 7 minutes. And I believe this video here is only maybe about over 2 minutes. So we'll go over that. Then we'll do a little question and answer, and then we'll wrap it up for the day. The market is almost open. So I'm excited. Let me know if you guys can hear the video.
Epic Scholars, welcome back to another video. This is Intro to Forex Part 2. In this video, we're going to kind of talk about what is Forex, where did it come from, and who are the key players in these markets. So Forex is the largest financial market in the world, trading $6.6 trillion a day. So let's talk about it with a real world example. I live in the United States and we use the dollar here. If I were to travel to Great Britain and exchange my dollars for their currency, which is the pound, I would be participating in the foreign exchange market. Switching one currency for another is participating in the Forex market. And because of new things in technology, we now can participate in the foreign exchange market on any of our smart devices. That's your cell phone, that's your tablet, laptop, as long as you have Wi-Fi connection. So who all participates in the foreign exchange market? Who do we trade against? So In the foreign exchange market, big players in the game are governments around the world, central banks, hedge funds, and private banks. These market makers, manipulators, central banks, hedge funds, you're seeing participate in the market. They push the market up and down. They're manipulating the market for their own best interest. So, who are these players? You have the commercial banks, that private credit organizations that do most of the global currency trading through electronic networks. You have governments, the market movers that set economic goals and shape the market with political decisions. You have the traders, the risk-taking individuals who come across the Forex market to earn money quickly. Investment funds, these are high-skilled investors who have a broader selection of investment opportunities. You have corporations who are active hedgers seeking to protect their profit through buying and selling currencies. And then the central banks. These are the Forex trendsetters that control the money supply in a given economy. These groups make up about 80% of the market, and you have to have millions and billions of dollars to be a part of those groups. Now, for people like me and you, we only make up about 20% of the market. You would have to have billions of dollars for your transaction to move the market, right? So on your journey to becoming an independent trader, knowing how to trade with the big players and not against the big money is how you become consistently profitable. All right, we'll see you in the next video.
All right, so I kind of want to go over this video. Let me pause this recording. Okay, so we're back. So I wanted to go over this because I think Coach Max did a good job on having a follow-up video that explains exactly what Forex is. Here's why, because whether you're marketing Forex or whether you're new to it, understanding this as a whole helps you to understand what role you play in the Forex market and how you can make money. Why do I say that? Because there are very, very huge heavy hitters, big heavy hitters that we don't even know about that participate in this market. So we're really talking about governments. We're talking about commercial banks, corporations, central banks, investment funds, and then, of course, retail traders, which is us. So these groups make up 80% of the market. So that lets us know a couple of things. Number one, this is a very powerful market. We're talking about money, pure money. This is what makes the world goes round. So it lets you know that if you learn this Forex skill, this trading skill, you have a very powerful way of making consistent income for yourself. One of the hardest things that a lot of people have when coming out of high school is we're always trying to figure out, okay, what exactly are we going to do with our life? Are we going to be able to find a profession that's going to be strong? Well, knowing this information is going to be pretty much give you that answer. All you have to do is learn the skill. This is a $6.6 trillion industry that pretty much the whole world is a part of. So now you're sitting there saying, man, if I learn this skill, I have a skill set I can make money from no matter what. Couple other things. So now you know who's 80% in the market. Now it's us retail traders, you know that you're 20% of this market. So it lets you know you have to trade with the trend. You have to do exactly what the banks are doing. That's why we educate people in this market. Support of resistance, order blocks, smart money concepts, supply and demand zones, uptrend, market structure, price action, candlesticks. Those are the things that helps you to understand how all these big hitters are making money in the market and not missing a beat. So I wanted to go over that with you guys because then it kind of helps us to fully understand what type of market we're in. This is a very powerful market. I'm thankful that this exists and that we can even make money in this market because it's that powerful. I mean, you got governments, commercial banks that have billions or trillions of dollars that trade in this market. So people have the question, can you really make money in Forex? I mean, can you really make enough to quit your job? Absolutely. Because you have all these big people here that are making money in this market. They're dipping their own money in this market and they tripling it, including our money in the savings account. So I kind of wanted to go over that. And I think it's good for everybody to go over that because they
Their
understand
own
what
best
markets.
interest. So
We'll go over the basic Forex terms. This is only going to be a 7-minute video, and we're going to kind of just go over the terms a little bit more. That way we can just kind of understand them, and then we'll just wrap it up.
hello, Epic Scholars. In this video, we're going to be talking about basic Forex terms. So the first thing that you're going to hear as you're learning how to trade is the software that you're going to be using or the app that you'll be using to trade. MetaTrader 4 or MT4 is also known as an electronic trading platform widely used by online retail foreign exchange traders. So this is what the symbol looks like when you download the app. When you begin to actually get actively trading, each broker or each platform that's used to trade is going to give you their own version of MetaTrader 4. The next thing is becoming familiar with the terms of buying and selling. So you're going to hear terms associated with the market going up and the market going down. You have buying terms, which is going long, holding a long position. The market is bullish. Market is creating higher highs and higher lows. You'll see that represented as HH and HL. The market is moving up in an uptrend. The market is ascending. These are buying terms. Selling terms, going short, selling, short position. The market is bearish, bear down. Market is creating lower lows and lower highs. You'll see this represented as LL and LH, downtrend and descending. We also have a term not listed here called consolidation. This is when the market is moving sideways or moving in a range. That is called consolidation. Understanding pips. You're going to hear this term pips all over the community, all over the Forex network. Understanding pip values is important. So when you come to a chart and you see price, you're going to see this right here. And we're going to talk about this on the next coming slides. Each decimal value represents a certain amount of pips. All right, we primarily deal with the pip itself and then the fractional pip, which is a pipette. Okay, so for this price, these are what these decimals represent. A pip is the smallest unit of measurement in Forex trading. Pip refers to the fourth decimal of the currency quote if the currency pair has either fourth or fifth decimal value. If the pair quotes only decimals up to the second or third, then the pip is the second decimal value. Japanese yen pairs are the ones that the quote up to 2 or 3 decimal, and we will look at that in just a second. So the reason why currency is quoted, okay, in pairs. So we're going to teach you how to actually read that so you can understand this a little bit better. Okay, so when you see currency, the currency is all in itself, you're going to see them put together as a base and as a quote. Okay, so the base is the left side of the pair, the quote is the right side. All right, so a currency quote refers to the value to which one currency is being exchanged for the other. In this example, the euro is being exchanged for the dollar, or the dollar is being exchanged for yen. In other words, whenever you have an open position in Forex trading, you are exchanging one currency for another. All Forex quotes are quoted with two prices, the bid and the ask. In general, the bid is lower than the ask price. The difference between the bid and the ask price is known as the spread. This is very important when you begin to start placing trades. Okay, currencies are always quoted in pairs. So it is very important to understand that you are simultaneously buying one currency and selling for another. Again, how do you know what you're buying and what you're selling? Looking at the base and the quote price. So let's use this Euro USD for example. Okay, the Euro would be the base, the USD would be the quote. Okay, the base rate or the base currency always has its own value. The second listing currency on the right, the counter or the quote currency, always has its own value. When buying and selling the exchange rates, they tell you how much that you have to pay in units for one of the base currency. This is where the spread comes in and the bid and the ask price. Understanding this is going to help you as you go along. So let's say the bid price for the Euro or the bid price was this, and the ask price was this right here. The difference between the two is a spread of 2.1 pips. Okay. You will begin to understand this again as you are placing trades. The bid is the price at which your broker is willing to buy the base currency in exchange for the quote currency. This means that the bid is best available at the price that you, the trader, can sell to the market. If you want to sell something, the broker will buy it from you at the bid price. The ask price is where the broker will sell the base currency in exchange for the quote currency. This means the ask price is the best available price on the market at which you can buy. Okay, that's the ask price or the offer price. The spread is the difference between the two. All right, so that is covered, and every currency pair has a different spread. That's very important as well. Candlesticks. When you come to a chart and you begin learning how to read a chart, you're going to start seeing these candlesticks. Candlesticks are the green and red rectangle and square shapes you see on the chart with wicks coming out of each side. So you're going to see rectangle shapes, square shapes, shapes that are like T's on your chart. These are showing you where price essentially opens up and closes every single time frame that is on a chart. Forex candlesticks provide a wide range of information about currency price movements. As I always say in all of my training, the money is definitely in the candlesticks. As you learn to trade, you will learn the anatomy of a candlestick and how to use candlestick patterns to determine order entries and exits, as it is easier to recognize price action using the candlestick chart. And we will talk about charting more as you go through the rest of the training. See you on the next video.
All righty, guys. So any questions so far about that video?
Yes. So when you have, I'm looking at the understanding pitch values, and she's saying that formula at the bottom looks like it's switched. Is that switched? I don't understand it.
This right
Because
here.
it says, yeah, exactly. Because it's saying that's ask and that's bid and that's the spread. And then in that table is the bid and that's the ask. So
Yeah, I believe so. Yeah. Let me see.
shouldn't it be the other way around for the formula, or no? I don't understand that part.
That's a good question. I think when I think I know what it is. I believe when you're selling, then so like when you look at up here, I believe when you're selling, that's where this number comes from, 1.36428. Subtract 136,407. That's what I'm thinking. because in the other video, now this is just me thinking out loud because I'm still learning this piece as well. But I think when you're doing a cell, it's kind of like, you know, when you subtract, you're taking away. So you kind of measuring how many pips you're doing in a cell. So I imagine that's probably what it is there. But I need to definitely find out more about this. But I think what I do,
If that's what you're saying, then you're correct, Paul, because when you subtract, it's always the greater number on top and the lower number on the bottom. I'm sorry.
Exactly. Yeah, thank you. Yeah, that's what I'm thinking. That's the basic math of it. Because like they said, this is a cell. Now, Euro USD, yeah, that sounds about right. It says a cell here. So then it would make sense why the greater number would be over the lower number. And when you subtract it, it gives you the amount of pips that the broker is going to take in order for you to get into that trade or to bid that trade or to ask for it. So I believe that's the case with that. Let me check the comments. Oh, okay, great, Jessica. Glad it makes sense. So yeah, I think that's really the case with that, because when you do a buy, you really you really in a sense are adding. You probably would add both of these really because it's going up, so you're adding more. Whereas when you're going down, even though you're catching pips, but it's really kind of like subtracting, you know, the amount of pips in that way. I wonder, let me exit out of here.
These are always quoted in pairs.
So I believe on this lot size conversion,
Profit.
they had one where it says lot size calculation or something. Let's see.
To be the strongest, or USD.
I have to look into that more. Figure out what's going on with that. But I know that's the basic calculation for when you're doing a sell. You know, that's how you calculate your pips. So yeah.